Alright guys, we're looking at Google. This is ticker symbol GOOG. It's Alphabet Inc. Class C. So this is the more common of the Googles as far as I know. It's currently sitting at $372.58. It is down 1.02% over the course of the day. In the after hours, it's down 1.27%. In the last 5 days, it's down 2.68%. In the last month, it's down 2.78%. Last 6 months, it's down Last 6 months, it's up 18.23%. Year to date, it is up 18.73%. On a 1-year chart, it's up 118.69%. On a 5-year chart, it's up 203.92%. On a maximum chart, going back to March 28th, 2014, Google is up 1,234.46%. Very cool. So, GOOG has a dividend of 0.24%. That's 22 cents a quarter. They have a PE ratio of 28.42. 52-week high of $404.44. A 52-week low of $163.33. An EPS of $13.11. With a market cap of $4.54 trillion, 5.46 billion shares outstanding, and about 195,000 employees. Google, ticker symbol GOOG. So they last reported earnings on April 29th, 2026. They beat by 94.3%. They were predicted to get $2.63 of EPS, and they got $5.11. They also beat on revenue by 2.67%. They were predicted to get $107.03 billion. They got $109.90 billion. Wow. Let's go down and see when the last time that they missed was. If they have. Okay, good. We go back to Q4 of 2024, and they missed on revenue by 0.21%. Okay. And that's the last time that they missed right there. So they haven't missed since then. And before that, there's not any other misses on this graphic here. So here we go. Alphabet smashes EPS and revenue estimates. Alphabet reported a massive earnings beat with reported adjusted EPS of $5.11 against an estimate of $2.63, while revenue reached $109.90 billion, surpassing the expected $107.03 billion. Management hikes 2026 AI spending guidance. The company raised its full year 2026 CapEx guidance to a range of $180 billion to $190 billion, signaling intense commitment to AI infrastructure and anticipating even higher spending in 2027. Cloud backlog signals massive future runway. The Google Cloud backlog nearly doubled quarter over quarter to $462 billion, indicating that enterprise demand for AI and infrastructure is translating into long-term contracted revenue. Google Cloud achieves explosive milestone growth. Google Cloud revenue surged 63% year over year to $20.03 billion, marking its first $20 billion quarter and showing significant acceleration from 48% growth in the previous quarter. Search business proves resilient against AI. Despite fears of AI disruption, Google search and other revenue accelerated to 19% growth, reaching $60.4 billion as AI-driven engagement bolstered the core advertising franchise. Market rewards visible AI revenue success. Alphabet shares initially jumped 6% following the report as investors prioritized the cloud revenue breakout and search stability over the elevated capital expenditure outlook. Alphabet maintains significant Alphabet maintained significant momentum following a robust Q1 2026 earnings beat and explosive cloud growth. Analysts project continued strength as the company scales AI infrastructure, though sentiment suggests the massive $180 billion capital expenditure plan and ongoing regulatory scrutiny remain critical watch points for the next quarter's performance. The bullish view. Explosive Google Cloud acceleration. Google Cloud revenue surged approximately 63% year over year in Q1 2026, reaching $20 billion with an operating margin exceeding 32%. A massive customer backlog of over $460 billion indicates sustained demand for AI-driven infrastructure and services, driving analysts to raise price targets toward $430. AI-driven financial transformation. The company reported record Q1 earnings with EPS of $5.11, nearly doubled consensus estimates fueled by AI adoption and pricing strength shown at Google I/O 2026. This performance has fortified investor confidence, supported by high-profile institutional backing and a strong cash position exceeding $125 billion. Strategic infrastructure investments. Alphabet raised its 2026 CapEx guidance to approximately $180 to $190 billion to support unprecedented data center expansion. Analysts view this as a competitive moat building exercise that will strengthen its AI model capabilities and long-term revenue streams through partnerships with firms like Anthropic and EQT. Margin pressure from record CapEx. This is the bearish view now, guys. The plan to spend approximately $185 billion in 2026, more than the previous 3 years combined, introduces significant execution risk and pressure on returns. Markets are wary that the high capital intensity and associated depression could outstrip search engine profits if AI monetization fails to keep pace. Escalating regulatory and competitive threats. Alphabet faces multi-billion euro fines in 2026 under the EU's Digital Markets Act and a potential 3 to 5% slip in domestic search volume due to mandated choice screens. Additionally, Gartner projects traditional search volume could drop 25% by late 2026 as the users pivot toward AI native answer engines. Valuation and PEG ratio concerns. Despite strong growth, some models suggest the stock is roughly 16.5% overvalued relative to its intrinsic fair value. Analysts note that with a PEG ratio of approximately 1.8, Alphabet appears less attractive compared to peers like Nvidia, which offer higher projected earnings growth at lower relative valuations. This is written by Mike Wheatley. Alphabet unveils plan to sell $80 billion in shares to fund ongoing AI infrastructure build-out. Google LLC parent company is seeking to raise a massive $80 billion in equity capital through a stock sale in an effort to bankroll the ballooning cost of its artificial intelligence infrastructure build-out. In a key endorsement of the plan, Warren Buffett's Berkshire Hathaway has already agreed to throw in $10 billion through a private placement. The technology giant said in a statement that the money raised will be used to fund its ongoing investments in data center infrastructure and world-class AI compute, and help it to meet unprecedented customer demand for its AI services. Officials added that the company is experiencing strong demand for its AI solutions and services from enterprises and consumers at levels that are exceeding the company's available supply. By scaling its investments, the company seeks to expand its foundational infrastructure to support the significant growth opportunity ahead. It added, Alphabet has been racing to build out its AI infrastructure in an effort to keep up with rivals such as Amazon Web Services, Microsoft, and Meta platforms. The four hyperscalers are expected to spend a combined $700 billion plus on AI infrastructure this year, and that is really only the beginning. In 2027, Wall Street analysts anticipate that total AI-related CapEx will rise to more than $1 trillion. In April, Alphabet said it's increasing its own CapEx forecast from an initial estimate of $175 to $185 billion to a new range of $180 billion to $190 billion in response to a question from an analyst asking what keeps him awake at night. Google chief executive Sundar Pichai said compute capacity is his biggest worry. Be it power, land, supply chain constraints, how do you ramp up to meet this extraordinary demand for this moment? He responded. Hyperscalers have primarily funded their AI infrastructure buildouts through the debt markets. In April, Alphabet held a global bond issuance that exceeded $30 billion, then raised an additional $11 billion in pounds sterling and Swiss francs from European investors. That came after a $25 billion bond sale in November. Alphabet has been helped by its surging stock price, which has more than doubled in the last year, putting it ahead of all of its mega-cap peers. Investors have cheered the company's spending plans and also the strong returns it has seen thanks to services such as Gemini. However, its growth has stalled this year, with the stock up just 18% in the year to date, and it slipped in extended trading today. The latest funding plan includes $30 billion in underwritten stock offerings, of which $15 billion will be sold as depository shares representing mandatory convertible preferred stock. There's the $10 billion from Berkshire Hathaway, and the additional $40 billion will come through an at-the-market offering program, encompassing Class A and Class C shares that will begin in the third quarter. Alphabet has hired the services of Goldman Sachs, JP Morgan Chase, and Morgan Stanley as joint book-running managers for the underwriter offerings. Goldman Sachs will also act as the placement agent for Berkshire's private placement. Berkshire has become one of the largest investors in Alphabet. It revealed it has been buying up Alphabet stock in the third quarter of last year, and prior to today's announcement, its stake in the company was valued at about $20 billion, making it one of its top investments. The company had initially invested $4.3 billion in Alphabet stock in November, in what was one of its most significant moves into the technology sector for years. However, Apple Inc. remains its biggest technology holding. Pretty cool. That's by Mike Wheatley. How is Goog exposed to SpaceX? Alphabet is exposed to SpaceX primarily through a highly lucrative, decade-long equity stake that originated from a $900 million joint investment in 2015. Recently, regulatory disclosures revealed that Alphabet held a 6.11% stake in SpaceX at the end of 2025, which was subsequently diluted to roughly 5% following SpaceX's early 2026 merger with Elon Musk's AI firm xAI. With SpaceX currently eyeing an IPO at a valuation of up to $2 trillion, Google's minority position is valued at approximately $100 billion, representing a massive unrealized balance sheet windfall. Beyond the purely financial exposure, the two giants maintain a strategic relationship, which includes Google utilizing Starlink to expand global cloud and internet connectivity, as well as active, forward-looking discussions regarding the deployment of orbital, space-based AI data centers to tap into highly efficient solar energy. So that's pretty cool. So they're the largest investor in SpaceX, I believe. Are they the largest investor? Alphabet is not the largest overall investor in SpaceX, but it sits at the very top of the institutional hierarchy. Founder Elon Musk remains the largest shareholder by a wide margin, controlling roughly 42% of the company's equity and retaining 79% of the voting power through super voting shares. Investors heavily reshaped by its massive early 2026 merger with xAI and massive spectrum for stock acquisitions from EchoStar. Within that institutional class, however, Google and Fidelity Investments, who jointly kicked off SpaceX's large-scale funding with a $1 billion investment back in 2015, remain the largest and most influential corporate and institutional backers on the ledger. So, them and Fidelity are the two largest of the institutional backers. There he is, Sundar Pichai. We all seen him, we all know him, we all love him. Sundar Pichai is an Indian-American business executive who has been CEO of Google since 2015 and the CEO of its parent company Alphabet since 2019. Pichai began his career as a materials engineer following a short stint at the management consulting firm McKinsey & Company. Pichai joined Google in 2004, where he led the product management and innovation efforts for a suite of Google's client software products, including Google Chrome and Chrome OS, as well as being largely responsible for Google Drive. In addition, he went on to oversee the development of other applications such as Gmail and Google Maps. Wow. So there we have it, guys. That's Alphabet Class C. That's GOOG, ticker symbol. Yeah, let me know what you think in the comments. With the big SpaceX IPO, Google is probably going to move some with that. So, should be pretty interesting. Yeah, let me know what you think. Like and subscribe. It's your cousin Dustin.